Hello, and welcome to our video essay on finance charges. If you're paying off a credit card, loan, or any other type of debt, you've probably heard the term finance charge. But what does it really mean, and how does it affect the way you pay? In this video, we'll explain what finance charges are and give you some examples to help you understand them. Let's start with the most important things. A finance charge is a fee that a borrower pays for using the money they borrowed. It's the cost of borrowing, and it can come in many forms, like interest, service fees, or transaction fees. Finance charges are basically a way for lenders to get money from their customers. Now, let's talk about the different kinds of finance charges. Interest is the most common type of finance charge. Interest is a percentage of the loan or credit you take out, and it is usually written as an APR. Say, for example, you borrow $1,000 at a 20% April. That means that over the course of a year, you'll pay $200 in interest. A service fee is another type of finance charge. This is a flat fee, like a late fee or an annual fee, that is charged for certain services. Say, for example, you have a credit card with an annual fee of $50. That means you'll have to pay $50 every year, whether you use the card or not, just to keep it open. Last, there are fees for making a transaction. These are fees that are charged for certain transactions, like cash advances or balance transfers. For example, let's say that cash advances on your credit card cost you 3%. If you get a cash advance for $1,000, you'll have to pay an extra $30 for the transaction. Now, let's talk about how finance charges can change how much you have to pay each month. The interest rate is the first thing to think about. If the interest rate is high, you will have to pay more in fees. This means that loans with lower interest rates will have smaller finance charges and will be cheaper overall. The length of the loan is something else to think about. The longer the loan, the more time there is for interest to build up, which means more finance charges. This is why, even if the interest rate is the same, a 30-year mortgage will have a higher finance charge than a 15-year mortgage. Last but not least, you should think about any service or transaction fees. These can add up quickly, and they can make a big difference in the amount of interest you have to pay. For example, say you have a credit card with a $50 annual fee, a $35 late fee, and a 3% cash advance fee. Even if the interest rate is low, these fees can add up to a lot of money over time, even if the interest rate is low. So, to put it all together, a finance charge is a fee that a borrower pays for using borrowed money. It can be in the form of interest, service fees, or transaction fees, among other things. How much you'll pay in finance charges depends on the interest rate, the length of the loan, and any other fees that might be involved. You might be wondering what all of this has to do with a TV show. Well, let's use Game of Thrones as an example. Let's say you want to borrow money to build a castle like the one the Starks are building in Winterfell. Now, the lender will charge you an interest rate based on how the market is doing, how long the loan is, and how good your credit is. The amount of finance charges you have to pay will depend on how long the loan is and how high the interest rate is. Also, if the lender charges any service or transaction fees, like an origination fee or a prepayment penalty, those will be added to your finance charges. But, just like the Starks were able to successfully defend Winterfell from their enemies in Game of Thrones, you can successfully manage your finance charges by knowing the terms of the loan, keeping an eye on any extra fees, and looking for ways to lower the interest rate, such as by shopping around for different lenders or negotiating with your current lender. In the end, finance charges may seem like a small and unimportant part of getting a loan or credit, but they can add up to a lot over time. By knowing the different types of finance charges and how they affect your payments, you'll be better able to make smart financial decisions and avoid falling into the traps set by predatory lenders. Always remember that knowledge is power, and if you know how finance charges work, you'll be able to handle money like a real Game of Thrones king or queen.